Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday, August 11th. This will be our chart lesson for the day. Um, you can see here the daily chart. I like to start out with this one. You can see on this cayenne, I think that's how you pronounce that color. We got the close outside, easily got a new high in place, and it looked like, this day was second real strong bullish day. But it sold off quickly before the day was over. I'm surprised we didn't close more negative than that, but I've been expecting a sell off for the longest, and it just doesn't come. This thing just keeps pushing higher. Every time you think that it can't go any higher, it pushes another leg up. So um, I'm not about to call a top yet. I still think we're probably going to make a new low before this is over. The chart could change, and maybe we don't, and we just keep going higher. And at some point, you say, "Hey, we've moved too far to get a retest now." But that hasn't happened yet. I mean, when you look at the big scheme of this overall down move, this last leg, we haven't even taken back 50. Well, we might have taken back 50% of it, but a lot of times those turn downs come at about a 50 to 75% of the move, and then turn down. So. Uh, I mean, the measured move down here would be the whole width of this. So I'm saying we probably moved 50 to 60. So we should be getting close. If we're going to turn back down and go lower, we should be getting close. We're definitely still way overbought. You can see we closed below the brown line today. But that doesn't mean we've been overbought for a while, and it just keeps going higher. So 50 to 75%. If we go much further than that, then I would say something's changed, and maybe the chart's changed, and probably will have changed by then, and I'll change my mind about a retest of the lows. At this point, I still think we're going lower at some point. When that's going to happen, I'm not going to try to call it. Never try to call a top. Um, we've met every target so far, except for this last one here. Will we beat it? I don't know. Very possible. We're real close now, so maybe it makes a jog down and then makes a second leg up, because sometimes you get a break in two legs up to a new high before it turns down. So we'll see, but you can see it definitely closed bearish today. Not as, it would have been, I would have liked to seen a bigger bearish bar and closing way down here. That would give me more, um, that would give me a little more information that, hey, maybe we finally topped out here and we're going lower. At this point, it looks like a top. We could be topping, but there's no guarantee of that. So anyway, there it is on the daily chart. You can see it was, for the most part, a bearish day. We traded way up here and sold off, so it's kind of a reversal type day to the downside. But let's flip over to the intraday chart, the 2,000 tick chart. We'll go through the trades, and we'll wrap up this day and this week. So it is Thursday, no chart lessons on Fridays. So this will wrap up our week today. Okay, here's a very wide angle, broad view of it. You can see we had a two-tiered channel working up. And when we didn't get back up to the highs here, it's telling you that, hey, there's a good chance we might get a break. I still thought we'd probably get a retest of the highs. But this thing sold off. We got a move down. And so from that point there, I'd look for a measured move. And you can see we came real close to getting a measured move down there. So we missed it. We missed it slightly. Actually, maybe we didn't. Maybe we only missed it by a couple of ticks. And I may not have it exactly right here. There it is, right off those lows there. Yep. And so it looks like we missed it by a tick or so. Not much. That's close enough to call out a measured leg. I see two measured legs down there, and I see pretty much two legs. There's multiple swings, but there's clearly two legs up, then a two-legged correction, and another leg up. And so there's just two legs in this leg, and it made it a little larger, but it's still two legs up with a two-legged correction in the middle of that. And there was a gap on today's chart again. To fill that gap, we needed to trade down to right here, and you can see we did fill the gap today. but there's still a gap from the prior day that's way down here. And, you know, like I talked about yesterday, we usually fill those gaps on the same day. And we didn't do that yesterday, and we didn't fill it today. So there's an old rule. I don't know how accurate it is. This is, you know, anything you learn in the past is probably wrong. But there's an old rule that probably holds true for this saying, is that, you know, when gaps are filled in a multiples of three, so either 3 minutes, 3 hours, 3 days, 3 weeks, 3 months, that kind of 3 years, that kind of thing. So then usually it's all within 3 days. So if we fill that gap tomorrow on another down day, that would be 3 days. So could we get a down day tomorrow? That's not enough evidence to be thinking ahead and saying I'm gonna bet it on down day, but yeah, we might could. So, but let's zoom in here. This always feels like I'm backing out to zoom in. I used to say that. Sometimes people would always correct me. We're not backing out, we're zooming in. So if you ever hear me say we're backing out, it feels like I'm backing out here to get a closer look. But yeah, I guess backing out, you would be getting further away. So anyway, I was educated in Mississippi, so y'all have to excuse me. Anyway, there it is. We zoomed in here. 7 o'clock came in this move right up through here. We're too far away from the EMA and too far gone here. I don't see anything I really like after 7 o'clock. We do get a second entry here. There was an overshoot, so you've got this khaki channel. So I would, even if you had a good signal bar here, I don't know that I'd take that trade. I'd probably say wait on a higher low or a reversal or something, and the higher low is no good, and then you've topped out and it's over. And we get the khaki channel coming down, break, kind of goes sideways for a little bit. What's happening is it's stuck on that EMA, and there's a midline here because this turns out to be a range, and you can see prices are testing each side of the midline of that pink range before it finally drops down, finds support. Again, I don't see any reason to go long, but notice you get a double bottom here, first entry, second entry. So right, and it does confirm that trend line. So I like going long there, just assuming you're going to go back to the highs again. It makes a pretty good move here, but comes back, runs all the stops, break even stops, and then goes up to the high. And you can see it really struggles to. There's another second entry here, but that's an inside bar. I wouldn't take that. I'd wait, and you don't get another chance. It just runs up, and you can see the resistance there before it finally makes a new low right here, and it tries to go higher, and it tries to go short once, and it breaks out, and it fails. So there's a failure right there on that bullish bar. Even if it's going to be a permanent failure, which I don't think it is, because you also see the trend line up there, and that you pretty much confirmed it here. So that's another confirmation of that trend line. So the odds are pretty good you're going to get a scalp and maybe more out of that, and this thing takes off. So maybe you had to be quick. You had to have your order ready because it gaps over. So you may have had to use a limit order here, and you couldn't. If you tried to get any more conservative with it, you got left behind because notice there's a gap right there. It closes there, opens here, goes up. It does back up, and it backs up again here. So you could have got in there probably with one tick above this bar, maybe definitely two, maybe one, and you still could have ridden this out. It does come back yet again here. That's just a first entry. It's a pretty good signal bar. It's right off the key entry point. Again, though, I think I wait on the higher low and our second entry, and we just don't get it. It runs on up, and then it runs down here. Just keeps going. It actually breaks higher right here. I'm pretty sure it does. Let me just verify that. The high there's 54, and you can see that's well, that's 54. Maybe it doesn't break higher there. Okay, 54. So yeah, it does not break higher there. I thought there was a first entry there, but either way, you can see there's two legs down there, and then you get this little trap. Notice how prices turned lower right there, and one tick lower and failed and turned up. You do have this channel working down a close outside, a new low, and there's clearly two legs down, even though there's not a second entry. And so this is like a higher low, double bottom with all that room. I don't think I would wait until this bar closes and go long here, because you see how you might get resistance at that EMA, and we could be going lower because the trend line's down here. So the idea here is you're really only interested in this enough to ride it back to the EMA, and so your entry would have to be on this engulfing bar. When it broke lower and turned up and went out the other side, if it breaks out the other side, you're probably going to trap some people, and it's probably at least going to the EMA. So maybe you take that trade. I marked it green. There's a higher low here, but I think you moved too far to say, hey, that's a higher low. Maybe you're going to get another leg up. And technically that's a second entry because you move down and this is a first entry and this is a second one. So I didn't mark this trade, but you may look at that as a second entry. It's a little convoluted. It's on a bigger pattern, most definitely. But technically, by the counts, it's a second entry, and it went lower first, so it may have trapped people. Again, it's an engulfing bar. Here, I don't think I would enter that on an engulfing bar, but if it breaks above that bar, you're probably going to get a scalp out of it. So maybe you go long there. And then now you got a second entry short up here. Signal bars probably closes in the lower 1/3. It's questionable though. And we didn't quite get a new high, but we're a long way away from the EMA. So it's a good chance if it breaks lower there on that second entry, it's coming back to the EMA. So maybe you take it too. I marked all of those green. They're not ideal perfect trades or anything. And then of course you don't get anything else here. You get a break, and of course you don't want to go short right there. And I don't see anything I want to go long here on. Again, you do have a bigger picture first entry, second entry, but this bar, notice how they got matching highs and there's stems on both of those. It looks like, I mean, that's not a tiny body, either one of those, but there's more stem than body definitely on this one. So that's congestion. I'd skip that. Wait on something better, even though you're probably thinking maybe long here. And of course, notice it makes a new swing high right here. Basically, it makes a double top, and then you try to go higher once, twice. There's also a first entry, and then it breaks out, turns back down. That's a second entry short. I like going short there. First entry, second entry, and then it's got that little failed break higher there, which creates a trap. So I like going short there. And it does confirm that trend line. But most likely, and that is congestion, so that was another reason you got to be careful going long there. And because there's a good chance you might get trapped, and this thing may make another leg down, similar to what it's already made over here. And instead, this thing just starts a downtrend. Runs on down, bounces a few times off the lows, and then you get another second entry right here with a big bearish bar. Notice the low, first entry. And it technically triggered when it broke below that one, but these have matching highs, so you could use this as well. And that's a quick, easy trade. Probably get a runner on that one. And then notice how it didn't make it down here. That's giving you a clue. We might get a break of the trend line. So scrutinize this thing really closely. If you get a second entry here and they're still in this green channel. Notice the green channel. And notice there is a new low, first entry. And so if it breaks below right there, that's a big bearish bar right at the key entry point. And it is a second entry short. And if you take that trade, there's exactly 6 ticks there, which is exactly what you need to scalp out. So you could have scalped out, but the fact that we didn't make it down here leads me to say, hey, I'm going to wait on this to play out, or I'm going to skip that trade and we'll see if maybe we get a lower high. And look what happens, it goes higher. And that's why in some instances you say, let's wait on a lower high to prove that we're not still making higher highs, higher lows, higher high, higher low, higher high, higher low, higher high. Finally, a lower low. Lower high, higher low, lower high, and then it goes down. So really, you got a leg down, a little two-legged correction, and another leg down. So this is where you'd want to wait on a lower high, because there's there's too much evidence that we may get a break here, and that's exactly what happens. And you don't want to get trapped right there. Of course, in this case it worked, but I'm not even going to mark it green because I saw it in real time and said, no, I'm not taking that trade. And it would have worked, but you would have struggled getting that last tick. And it's a good chance, you let it shake you out of a good trade because it wasn't a good choice for the reasons I just explained. But now you got your break, 2 legs up, and you make a lower high, and there's a second entry. Notice that low, first entry, second entry. This should lead to at least, hopefully, a measured leg. And you can see that's exactly what it did. You get a little more in a measured leg, and it bounces and gives you one more leg down, and it's probably a measured leg too. Again, real close. So that's a second entry short, big bearish bar, lower high. And you could look at that as a first entry and the second entry, so it's a failed second entry long too. So 2 ways to look at that trade. Lower high here, but that's moved too far to call that a lower high. That's just a first entry short. Notice the new low, first entry. Don't take that trade. Works, but next time it probably won't. So bounce here. Again, you get a first entry, second entry. But this is, look at all that resistance up there. I originally, I thought I marked this green because you could kind of argue that you try to come up here, but looks like we're still in a downtrend. So to me, that really just looks like a double test. And I don't think you want to enter in that congestion on a double test. But when we get the triple test and that big bearish bar, that's where I like going short. And of course, it runs, in your expectations, it runs to the other side. And maybe it makes another leg down, similar to these 2 legs here or something. And it doesn't. It finds support there. You get a higher low here, no setup, runs up. And I draw this trend line just in case. And it bounces there. That's the third touch. But that's just a first entry. It's still below the EMA. Then it bounces up again, turns back down, and then it breaks higher. I like going long right there. I don't think I'd go long. It looks like most of the smarter traders waited till here. Maybe that just gave them a second chance if they didn't enter here, and a bunch of them did. But you don't have as much room here. I mean, there's not a whole lot of difference, but still, you're pressing it by entering here. If you didn't enter here, I would not enter here. And let me show you this as well. This is a double bottom. So this is a first entry, second entry that failed. And so it's probably going to act like a trap. And you can see it really took one more swing before it took off. And then you can see, obviously, there's stop runs in there. Of course, there's probably a lot of people short here that when this thing goes higher here, they're thinking, oh no, I got to get out because I'm going to keep my profits. But anybody that got short down in here are probably going to end up taking a loser, and they're not going to allow a loser to get too big on them, and they're going to exit. So, and then of course you get another double top, and then a first entry, second entry long. This one's close. You could almost argue for this to be red, but this was really the signal bar. And it breaks higher first and then turns down, and it's an engulfing bar. And if you're going to trade that, of course, you don't know that it's going to be an engulfing bar. So, but you can clearly see 3 bars right there, and 2 of them are dojis with no bodies. That's congestion. Now, I wouldn't be necessarily afraid to enter that if it wasn't a breakout here. That breakout concerns me, because most breakouts fail. And you can see it took a little while before it finally took off, and that's what you want to see. It test this a few times, and then before you really want to go long there. But it is a second entry. It is off this key entry point, so maybe you take that trade. But because it's an engulfing bar, if you enter here, you might even enter here still, because this turns out to really be the signal bar. But you could have easily got fooled here, because that's mostly bullish. But if you see the 3 bars, but anyway, if you enter on engulfing bar, your stop has to go here until this bar closes, and then you move your stop to 1 tick below that. And you'd have been safe easily on it. But you don't want to, if it's an engulfing bar, you don't want to let it stop you out 1 tick below this bar, unless you think you misread it. And in this case, it's pretty obvious that this green channel is right, and it's pretty obvious that's support right there. So there's lots of reasons to think you're going to get another bounce there, even if we are going to end up going lower. So it does bounce, comes back, gives you a first entry and a second entry. But again, look how congested that looks. Still would have worked, but I wouldn't take that trade. It's an inside bar. You don't want to take an inside bar. You definitely couldn't enter on this engulfing bar here because this is too bearish. No chance to enter here because it's a doji type bar. Runs up, makes a new high, and then makes one more push. That's why sometimes you got to be careful picking tops. I think you would have scalped out of that regardless. But you got to be careful trying to pick these tops because a lot of times they'll let them build up and think it's going to be bearish, and most of them will start getting in down here because now they got some evidence that looks like it's going to sell off, and then they run it up one more time and run all those stops, and then the bottom drops out of it. So be careful of that. Runs down, tries to go higher once, twice, so there's a failed second entry long there, and you got a new low right there, so a first entry, second entry, and this broke higher and turned down. Maybe you enter that on the engulfing bar, but when this closes this bearish, just go short there. There's a lower high here, but no setup, and then we're too far away from the EMA. It's just chopping along down the bottom here before it goes back to the other side. Now, I marked this first short. You wouldn't have necessarily had a trend line here yet. So I would probably, you couldn't count on this being off a trend line, in other words. So yeah, maybe you draw it right there, but that's just your first two swings. But because it is a second entry short, right at the EMA, and the fact that it tried to go higher once, twice, three times as a triple test, and I'd probably you take that trade, and it's got enough to get out there, and then it comes back again. It still would have survived regardless, but you would have already been out, so you wouldn't have got a runner there. But now you got another test right at the key entry point. Well, still you wouldn't have the key entry point, but that's just a lower high, and I still like that trade. There's still room back to this little double bottom. As long as you got room to scalp out there, take it. But then you get that failed second entry long that turns down. I like going short there. You could trade that on the engulfing bar, although I think it broke lower first and then came back and then turned back down. So you got to be real careful with that engulfing bar. You're probably better to wait and see what this does because this is sideways, and you don't want to go short right into those lows right there. But now that it's pushed on down, I think it's fair game, especially now that you set the trend line with that swing and then came back and confirmed it again here. And you could even make the argument that this is a failed second entry long, but it doesn't quite get back to the EMA. It's a doji. There's several bars stacked up. No, don't take that trade. It would have worked, but you can't risk that. And you just continue to kind of chop lower. Notice that came up short here. May get a break here, and of course you do. And it tries to make a new high and fails and gives you this real bearish bar. That's a little congested. I marked this on the lower high, big bearish bar, but I'm not crazy about that one. You'll probably, there's a good chance you could get a scalp, but that looks a little congested. And you can clearly see three or more bars, and at least one of them has a tiny body or no body. A couple of them actually do. Maybe even include that one in there too. So the better trade is to wait and see if you get the reversal, which is here, and you still don't have a new low in place. So that's the better place to enter, and then it makes the new low and bounces. That takes us up till we finally get a close outside, and then we're just chopping sideways, and I don't see any entries long or short before we go into 230 there. So yeah, I'd call this a reversal day. We traded up and found a high and then traded down, and we closed off the low, but not by much. So we clearly got the two legs down, and then so there was time for some profit taking and rallying. This is probably people taking profit before the 3 o'clock or whatever. before the market closes. So most of us have to be out by 3 o'clock. So wherever that falls in there, 1500 is probably right in here somewhere. But anyway, interesting week, interesting, a little better day today, a little easier trading today. You clearly get some second entries with good signal bars at key entry points and things like that. So a little different day today, but much easier than a day like this where you just don't get much of a chance for anything. I mean, that day still irks me to get a rally like that with no follow through. Actually, we did get the follow through, but it came the next day. I mean, if we measure that leg, let's just look at it here and see. So we didn't quite even get the measured move. Still didn't get the measured move. I mean, we still could go a little higher. Sometimes your measured move comes late, but my guess is I'm going to say the same thing I've been saying. I still think we got room to the downside to go, but I'm not ready to call a top yet. It's looking more like a top, but it's hard to pick tops, and that's why one of our main rules is don't try to pick tops and bottoms. Sure, we have the reversal pattern, but everything has to fall into place, and you need to be an experienced chart reader to trade those. Otherwise, don't trade them, or you'll just be breaking our number one rule, which is don't try to pick tops and bottoms. And the reason we have that rule is because that's where most people lose. Most traders lose money trying to pick tops and bottoms. Don't do it. It's a losing strategy. You need to be a really good chart reader, and then things have to set up almost perfectly. And we got people that can't even pick out a second entry trying to pick out a reversal, a failed second entry. All you're going to do is slow yourself down and slow your progress. Stick to the basics. When you get really good at the basics, the idea on reversals and failures are to learn them organically through experience. That's the reason I don't teach them in the manual. It's the reason you don't hear me talk about them other than the only reason I put them in the videos because we have some people that are at that point. So, but for most of you, I shouldn't even put a reversal in there because it just confuses you and slows you down, and people's pride won't let them admit that. But trust me, this is not, it's an advanced pattern, and you're trying to pick a top or bottom, and that's where most people fail. So swallow your pride. If this fits your description, if you're not a skilled chart reader that makes money pretty much every day, set the reversals aside and don't mess with them. Stick to the basics and let those come to you. Let the failed second entries and the reversals come to you organically. And if you do that, when they do come to you, they'll stick out like a sore thumb. I promise you. You won't have to ask me, was this one, or what did I do wrong here? Why did this failure fail? And you know, the worst thing I hate to see is somebody send me an email and say, why did this failed second entry fail? Well, if it failed, it wasn't a failed second entry. It looked like one, but it wasn't. So you need to know what you're doing. Stay away from those things. If you're not making money every day and understand, very skilled and understand, you can spot second entries at a glance and that kind of thing. If you're still relying on the second entry indicator to help you find a second entry, you don't need to be looking at even considering failures. Trust me. Just stay away from them. So, and I don't mean that ugly. I'm just trying to help you figure out why you're struggling and can't learn this is because you're trying to do more. Many of you try to do more than you should be doing. Your pride, you got to swallow your pride and say, this is harder. I don't care how smart you are. The smartest guys in the room usually are slower at learning because their common sense and their smarts work against them as a trader. I'd much rather have somebody that knows nothing about trading and it's just an average intelligence that doesn't think they're very smart, and because those people come in, they'll read the manual, they'll study it, they'll follow the rules, they'll study, and they have success so much quicker than smart people. And I don't mean that they're dumb people either. I'm just saying they don't think they're the most intelligent guy in the room like 90% of traders are. I don't know what it is that attracts the really smart brainiacs are attracted to trading, maybe because it's a challenge, and that your smarts will work against you because prices do not move based on common sense. Price action moves totally against common sense. So if you haven't ever heard me say that, make sure you listen to this part a few times. So if you're really smart and you're one of those people that have great common sense, and it's, you've reinforced that over your life using that common sense, it always pays off. 90%, 99% of the time, common sense will pay off for you. But in trading, common sense will send you straight to the poorhouse. And because prices do not move based on common sense, so everything your common sense would tell you to do will be probably exactly the opposite. You've heard of some people that say, okay, I've done this so long, and every time I trade, I lose. So I'm just going to be a contrarian, and when I think I should buy, I'm going to sell. When I think I should sell, I'm going to buy, and then suddenly they start having success. That's because they threw their common sense out the window and just started doing the exact opposite, and it worked for them. Most of you aren't going to learn that way, I don't think, but occasionally you hear those stories. And that's, in my opinion, that's why, because they throw their common sense out. They're smart people, they've got good common sense, and it served them really well, and it's been reinforced over many years of their life. But it's a death killer in trading, because prices do not move based on common sense. They'll do just the opposite of what common sense tells you. So anyway, this is over 30 minutes. I'm going to wrap it up. Hope you had a great week. Hope you have a great weekend. I'll see you Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.